African Bank is the largest unsecured lender in the South African market, with loan advances in the region of 50 billion rand and a market cap of 26 billion rand. In 2009, African Bank acquired Ellerins and has been digesting it ever since. The bank has a price to earnings ratio of 10 and a dividend yield of 5.7%. We know disclosure time. Your clients own this and you own this in bucket loads.
Yeah, we've been invested this one since they were like at 12 rand back in, I can't even remember when it was, 2003 or 4, when they really kind of emerged onto the scene. They did the Sambo deal. So it's a talented and dynamic management team. The original founders, principally Leon Kirk-Innes, has taken this thing to quite substantial heights, but it hasn't really done all that well in recent years. It's just not benefited from any rating advantage relative to the banks. It gets seen by investment community as a bank, and therefore it must have the same sort of anxiety as though it were Citibank or Lehman Brothers. But on the other hand, the loan growth that it's been able to deliver just doesn't really seem to be able to get much traction. Pity.
Rob, your stance on African Bank, of course, bearing in mind that Paul has exposure here.
Yes, well, I think
so. Don't make him too depressed.
No, I think the management have proved themselves over and over again over the last few years. So I think they're looking really good and really solid on their base. The Ellerins deal, they haven't got traction from that. Ellerins slowly growing, but not numbers like you saw from the JD Group from the furniture side. And slowly they'll get traction out of Ellerins. I really like it. The dividend yield, 5%, is really good. And they've come down 16% since June. So, you're looking at a retraction of about 16% if you take a look at that graph. And I think, you have to keep a look at the bubble, but I like them at these levels.
Well, smiling broadly is our Mr. Tehran. You've got a thumbs up here from Rob Tal.
Yeah, they're a very established player in the corporate debt market, and their treasurer, Gavin Jones, has done a great job at building the global brand, going global to Europe and the US and Switzerland recently in order to place more and more different funding instruments. Because I think the South African institutional investors were a little bit full of African bank paper. So the critical difference between these guys and other banks is that other banks have retail depositors who are so stupid that they give the banks their money and expect no interest really in return. You have no idea how much money people like Standard Bank and Nedbank and all those other guys make from you leaving your salary there from when it gets paid until when it runs out at practically zero rates
Listen,
of interest.
You're not making any friends in the banking environment, so I hope you're not looking for any home loans in the near future. Let's have a look at Abel's share price here. Rob, if you can just step backwards there. As you say, we haven't really gone anywhere. There is volatility. You're excited about it at current levels, Rob. Let me just get that reiteration.
Yes, I think it's pulled back 16%. There seems to be a big sell-off in all of the unsecured lending stocks. Capitec as well has had quite a big sell-off, and I think people are just aligning their books a little bit, maybe lightening them up slightly, and that's an opportunity to enter.
Well, we like that opportunity to enter. Is it an opportunity to accumulate more in your case, Paul? What is your level of conviction here?
I think there's two things going on. I think the management team signaled at a recent analyst event not only that they saw trouble potentially coming in the unsecured environment, but they said they thought it would be other people that got into trouble. Because remember, finding somebody to give the loan to is the easy part. Customers stream in the door every day. The key issue is having the systems in order to determine who is a good credit risk. So part of that is existing customers and their ability to pay, and careful monitoring of what's going on in terms of their financial lives, what's happening in terms of new members of the family getting gainful employment. But partly it's also computer systems and all of that. For me, I think there's another thing going on. They sort of alluded to the fact that they may be looking at another acquisition. So in much the same way that they went and bought Ellerins, why? Because they wanted to get all those millions of customers that Ellerins had built up over the years. I think they could be looking at another acquisition, possibly of somebody in the sort of home improvements and building space, believe it or not. Someone like Cash Build or something. The idea being that...
Do you like that, though?
I think it's fine. A lot of people in the market will say, well, that's terrible because they're just going to overpay and it's going to be another disaster like Ellerins. But for me, the long-term future of African Bank is all about getting more and more and more customers. And at some point, you've got to get to the point at which credit is in demand. So they did that with furniture. The other big source of credit demand is for home improvements in South Africa.
Rob, hot or not on African Bank?
I'm hot on African Bank at the moment at these levels.
Paul, hot or not?
Yes, I think it is very attractive. I mean, it was at 40 Rand a share. It's at 32 or something. People are hating it. You make money in the market from a rising price to earnings ratio. 10 PE for this company is too low.